video again.
Oh,
All right. So I've recorded. It's now recording. So today we're going to be looking at where to
okay.
probably expect the market to retest after it breaks out of the trend line, or maybe it's breaking out as maybe within the zone or within the channel pattern it creates. What I mean is, for example, we have a continuation strategy, a bullish continuation where the market creates a higher high and higher low, higher high, higher low, goes to create a higher high again. Now, so we want to look at how the market is able to, how to actually expect a retest before the market breaks out. So we're going to be considering this thing after putting your trend lines. The market breaks out. If it wants to pull back, where is it coming back to retest? So you want to find out the actual zone the market is coming back to retest before it starts buying. All right. So let's look at that
Yes.
in today's class. All right. You're going to learn a whole lot of things from this mentorship and you will enjoy it. All right. So now
Okay. Okay.
let's look for a simple continuation setup that we have on this chart. Let's see if I can find one. See if I can find one. All right, now for example, this one here we have on this screen on this time frame. There is a continuation setup here. I hope you can see that. This is a clear continuation setup on this time frame, but it's a daily time frame.
Yes.
You can see the market broke out. On this time frame, there was no pullback. It just went directly. Although if you go to lower time frame, you
Yes.
find a pullback here. But on this time frame, when the market came back to, if the market comes back, all you have to do is try to zoom out. It's try to trace where the market bought previously.
Yeah.
Now, for example, excuse me, we have something like this. Look at where this market bought from. And also look at this particular zone here. Market is going back to buy, and the market also tried to sell from here too. Then it means that there's a zone here, and if you go to a lower time frame, you can also notice the market sold from here too, meaning that this
Yes.
here is actually where you should expect the market to come to start buying. Why? Because the market had bought from that same zone previously. So you mark something like this and wait for the market to actually get there. Once the market gets there, you find your entry around that zone.
Okay.
All right. After the breakout, that is it. Then another example is this one here. It's another example right here. You see, after the market bought and broke out of the trend line, I don't want to delay you. I want to make sure you understand these things properly. Now look at this, what we have here. We zoom out, you also notice the market did what? The market bought from here. This where market also bought from. Market tried to sell from here. Market also bought from here. Market also sold from here. Then market sold from here. Then market bought from here. So the market bought and went up to this level and pulling back. Where do you expect it to possibly buy from? It should be around this same zone, right? Although this one will be like a
Yes.
kiss. This one will be like a kiss on that zone. Let me just move this first. Please remove all these circles. Then we'll mark the zone correctly. This thing I'm showing you is something that will help you reduce some unnecessary losses. All right. If you trace like this,
Yes.
you see now this is actually the zone I'll expect the market to actually come down to buy from. But unfortunately, you see the market did not come down to this zone to buy. Probably could be
Yes.
because of the fact that it bounced and retested this zone here. Now, let me show you something.
Yes.
You see the first retest that happened here. This is the first retest that
Yes.
happened here. So the market can decide to, maybe that's the reason the market did not come back here. Because if you happen to find this kind of a breakout, now I'm looking at what we have, the market structure here is a higher, a lower high, lower low, lower high, lower low. Okay, let me just say this can be a lower low. Then this would be a lower high. Then this one now, since it has gone below the wick, the body of the previous candlestick can be seen as a lower low here. All right. So since the market has gone above this one, there's a kind of a change
Oh,
of
okay.
character around here. So it
Yes.
went up, then came
Yes.
back to this zone where the market bought previously. This is actually a key level in the market. Then you can see came back here and retested, then it bought. You can see. So you only look out for where the market had bought previously after it breaks out of the trend line. And also, sometimes you don't need to wait for the market to totally break out of the trend line when the market is in a channel like this. For example, now let me just zoom out. You zoom in. You can see what happened here. See what happened here. Can you see this? This is a zone.
Yes.
The market has been
Yes.
struggling. I was even thinking maybe I should just focus on normal breakout and test. I will show you something. Let me just show you this one. Now look at what is happening here. Market has been struggling to buy from here. Then finally it broke and okay, when it tried to sell, but it bought, it sold and then broke through it, came back to be retesting. It has been finding it difficult to buy from this zone. Understand? Finally it
Yes.
broke out. But this time it broke out. It still came back and closed within this same zone. It did not close above. You understand?
Yes.
What does that mean? It means that anytime the market is able to break and close above this zone, the market will continue buying. Are you following me? But
Okay.
so
Oh,
because of
yes.
that is why so since the market closed within this same zone again and left a wick at the top. So the market continued selling. This time around, you see, this time around it was able to break and close above this zone, meaning there is a breakout at this point. There is a breakout at this point. All right. So what do you
Yes.
expect? Expect the market to pull back so that it can buy. So at that time, you just look for where the market had bought previously, so you can enter a buy. And where did the market buy previously? Somewhere around here. If you adjust this zone to accommodate all these wicks that we have here, you will see that we have a zone. That is why the market actually started buying from here. And also, if you go to a lower time frame, the 4-hourly time frame, you might identify another zone right there that made the market to buy from there. All right, let me zoom in. So now, for example, well, look at it here. You see, this is actually a kind of a rally-based rally, continued buying. So you can see the way the market retested. It just came back and retested on the fall later and then continued the buys. And mind you, this is not the
Yes.
main pullback. This is not the main pullback. The main pullback usually happens on the same time frame where the setup was found, which is this
Okay.
main pullback. This is just a one
Yes.
candlestick pullback retest. This is the main pullback here now. You understand? So the market came back, or you can just, if you're able to capture this one at time, you can then trade. Mind you, what you are seeing is that the market did not just break out. Um, the market did not just, where is that structure? Hold on. Okay, this is the structure we're looking at, sir.
It was on 24 hours.
Yeah, this is the one we were looking at the breakout. So you can see where the market pulled back, the first pullback on the 4-hourly time frame. Market sold down to this level, then before it started buying. All right, because the market had bought previously from this same zone. So it came back to this same zone again. So I'm getting to this same zone. As it gets to the zone, this is where you take your entry. And mind you, look out for some structures that confirm the market is actually going to reverse. One of those
Okay.
structures is an engulfing candlestick. I've not taught you the engulfing candlestick pattern we use sometimes, which is the engulfing candlestick strategy. Meanwhile, what I wanted to also make you understand first of all is this breakout here. I'll come to the entry.
Yes.
Now you can see the way the market was consolidating around here, unable to break out. Now, if you're looking at the breakout on the 4-hourly time frame, you think the market has finally broken out. Then you'll be tempted to enter a trade on the close of this candlestick. If you're not smart, you enter a trade at this point and you see it start selling. All right, which is not right. You understand? But if you look at it on a daily time frame, it was just a week that the market dropped. You understand? So this is when the market
Okay.
actually did the main breakout. After doing the breakout, it pulled back to this zone and it started buying massively. So the market has to give you a complete breakout. In other words, if you find this breakout within the channel, like let's say this is the channel, let's say you're able to find the breakout somewhere around here. The breakout happened around here. Then the market also moved the market, maybe the candlestick closed somewhere around here, and this is still the channel, you understand? Then if you notice any form of, let's say, little bearish candlestick that does not close below, maybe after this bullish candlestick, you notice another candlestick which is bearish and it opened and closed here. Maybe even if it goes down, maybe it drops only a week, but the body closed down here. It is an opportunity to enter the trade at this point to hold till you get to the end of the channel, and it should be something massive because this is on the 4 hourly time frame. What I mean is, instead of waiting for the market to actually get to the trend line, break out, come back to do a retest before you take a trade. If you notice a consolidation within the channel, then you see the market finally breaks out of the channel, then comes back to do a retest, then there is a chance you can make some profit by taking the trade right inside that channel. You must not always wait for the market to break out and come back to do some the retest before you make some profit. All right, so that is it about that. So if you're able to identify them when the market is breaking out, for example, see another one here. See another one. Let me show you something else. Let's say you are unable to find this opportunity. Then finally the market, maybe you're not able to take the trade at this point. At this point, market had already moved. Then the market bought and went above this zone here. Just wait for it to go above. As it goes above, you wait for it to pull back. Look at where the market also bought previously, which is from here. You can see the market bought. Then what do? You take your entry as the market.
Oh,
Can you see that?
yes.
The market pulls back. You must wait for it to come here. Now, you see where I placed that zone. I did not place the zone here. This is one of the problems so many traders have. You don't place it here. If I place it here, then I'll be looking for sell opportunities. But if I place it here,
Oh,
you consider where the market bought previously, which is down here and here. Then extend your zone to hold the wick of those candlesticks correctly. Forget about this high here. Now, when you do that, you see that you will stand a very high chance of capturing the move from the very beginning of the move. And also, if at all there's going to be any form of losses, it's going to be small, because if you enter the trade at this point, maybe sometimes you can set a sell limit right here on this zone, right here on this same zone here. Once the market gets here, it starts buying. You can set your stop loss. Maybe depending on what you see on the chart, your stop loss might be, even if it's close, then even the market hits your stop loss, you wait for it. It retraces back into the range. Then you put your stop loss below the new low it just created, because sometimes the market might kick you out twice before you actually get the move. But your stop loss, as long as it is close, and you look at your risk to reward ratio, is very high based on the fact that this is a higher time frame setup, you will see that you will make so much profit. Like here, you can see the market went up to this level before doing some of these things and then continued buying massively. All right. So it's very important that you take
yes.
note of those little things. They matter a whole lot. They do matter a whole lot. All right. They matter a whole lot.
Yeah.
If people, let me show you something. Let me show you one trade I took. I think I posted something on the Telegram channel today about one trade I took today on VIX 25 1S. This thing I'm teaching you is very powerful. One of my students was complaining to yesterday. I told her she should calm down, that uh, she doesn't need to be in a hurry. Many people are always rushing over trading. And when you are in a hurry to learn it, you keep on losing money on the way. Lose money, you lose money, you lose money.
Yes.
That is one thing about trading. So on the 4 hourly time frame, I noticed something. Let me just check it again. Okay, so on the 4 hourly time frame, I noticed there was a zone somewhere here. It wasn't actually a continuation setup, although overall it's actually a continuation, because the market, you can see, it created lower highs and lower lows in a bullish market. Then it broke out.
Yes.
So unfortunately, okay, I think I took this buy here. I took this buy from this zone. This is what I shared the other day in my video. The video I posted
Yes.
yesterday. I took this buy, the breakout, and it made some nice, massive profits. Then I also found another opportunity, yes, early this morning. Now look at what I'm saying. The market was somewhere around here. Market was somewhere here. So I looked at this zone,
Okay.
looked at this, look closely. I want to teach you something. See what happened. Can you see these rejections here? Market
Yes.
rejecting here for sales instead it bought. The market rejected here too for a buy instead it sold. Can you see that? Market sold from here,
Yes.
market bought from here. Then if you trace again, it market got to this same zone. Now there is a level here. If you consider this level, you'll be marking your zone something like this. You'll be marking this zone something like this. Now, finally, the market was, I noticed the market, bought and closed above this zone here, and then this is the bearish candlestick that marked the initial retest. So the market bought. So on coming back, which was this four candlestick, bearish candlestick, I noticed that the market had been buying from this, had bought from this zone before, from this place, which is
Yes.
it was unable, this wasn't really successful for it, but it tried to buy and also tried to sell, meaning that this is actually a zone in the market as long as the higher time frame is concerned, and you'll find it more strong on the lower time frame. So I only waited for the market to come down here because since it had bought, tried to buy from here before, it will also try to buy from here again. So I only waited, set to my sell limit. You can see the market bought nicely. It bought nicely. Only that I closed my trade at some point because I wanted to because be busy with something else. Else, my TP was,
Yeah.
which is about $30 in profit. So I think I closed when the market was about the trade was about in $27 in profit with the minimum lot size, which is 0.005. All right. So the main idea why I took the trade was just because there is a zone here. There is a zone here, and the market broke and closed above this high previously. You see, it closed
Yes.
above this high. It retested with this one candlestick. After it retested with this bearish candlestick, it bought. Then it came back on getting back to this zone. As so far, there was a buy around here before. So I decided to enter the buys. I set my stop loss, you know. I set my stop loss and then I went in to take the buys. So if you miss the initial movement of the market, you can always join it after it goes above a previous high or a consolidation. Just wait for the market to do something that looks like a consolidation. On going above it, you just wait for it to come back to the retest. Even if it is with one candlestick, it does the retest, you go in, especially if you're finding these things on a higher time frame. You stand a higher chance of making so much profit. Just imagine, usually, if you can just hold a trade from here to here, this kind of trade, which is volatile play, if you can just hold it, maybe just from here to here, these massive profits. That's why I like
Yes.
finding my setups on the higher time frame because even if you want it to move along just one candlestick, you know how much you stand to make compared to looking at it on a lower time frame as if there is so much. If you look at this thing on a lower time frame, you might even close your trade before it gets here. You'll be
Yes.
because it looks as if the market will just come back against you because of the wavy movement of the market moves wavy, so it might make you get scared. All right. So this strategy really works. You just need
Yes.
to look out for those opportunities. They are always available. So you wait for a breakout. Like this one, you can see where the retest happened. You see, you just look at this, it's still in that same
Yes.
what I shared initially. You can see the market after it formed, created this lower highs and lower lows from here. This is a high, sorry, this is a high, a low, lower high, lower low, lower high. This is not a lower low because it did not go below this low. So this is a lower low here at this
Yes.
point. Now it broke out of this trend line. After breaking out of this trend line, you see this trend line here and this there is a zone here too.
The zone.
Yeah, so the
Yes.
market broke out of the zone and also with the trend
And the
line.
trend line.
Yeah, the market sold from here previously, bought from here previously, tried to buy, sell from here, and also sold here. It sold here. So if the market can break out of this zone, what do you expect? It means it's still it's going to buy, even if there is no actual
Yes.
change of character yet. Are you following me? Because there's a strong zone
Yes.
here. Then the market is able to buy. and close, especially this particular bullish candlestick really confirmed the move. This bullish candlestick here confirmed the move. If I was on the chart when this happened, I would have entered the trade on this bullish candlestick. When it pulled back to this zone, I would have taken a buy up to maybe somewhere around here. Then I'll close my trade, But I didn't do that because I didn't see when it happened. But yet I still had the opportunity to trade this one when it closed with this bearish candlestick here. And the bearish candlestick, if the bearish candlestick closed below this zone, then I would have felt, okay, the market is coming back into the zone, but it closed up here. So what do you expect the next candlestick to do? Is to start buying because it's actually happening on the zone. The next candlestick started buying. Even if it tried to sell a bit and drop the wick, it started buying and it bought massively. All right. So when you combine trend lines and zones, and you understand where you have zones while the market within the trend line or within two trend lines, you're able to identify zones like that. It helps you avoid unnecessary losses because normally somebody would want to take a sell around this zone here. Generally, you want to take a sell when you see this rejection here. But if you take this sell here,
Yes.
take a sell here, then you see you are kicked out. What would you do? You take the buy, right? Is it not
Yes.
so? Yes, that's one thing I tell people. It's not as if you are trading, you are doing a revenge trading. You are saying that the direction of the
Yes.
market has changed. Let me tell you what happened to me this morning. When I teach you, I like teaching you what I do. For example, this particular pay here, this morning, let me get there. Okay. See, let me show you something. This morning, I marked this zone. I think it was, I don't know where I saw it. I think it was around here. I think it was around here. So the market, oh, was it here? Okay, yeah. This particular candlestick here, since the market has been just selling from here, then this candlestick bought
Yes.
above this zone and still came back to close within here. So I was actually expecting some sales from on the market
Yes.
going back to this zone. I was expecting some sales on market getting into this zone again. So I actually set my sell limit right here. I set my sell limit and left them right here. All right. So on leaving that sell limit there at that point, the market got to that point and started selling. It started selling. If you see on the 1 hourly time frame, you will see a market sold the bit. It was I entered years around there, so it sold up to this level. Then it started buying again. But since I was actually thinking it was going to continue selling, I lost because the market went back and hit my SL. The market went up and hit my SL because it is actually
Yes.
buying. Do you understand? So, and when that
Yes.
happened, I was supposed to look for an opportunity for revenue because when I noticed the market came back, the 1 hourly candlestick came and closed above here. I knew there was no way the market would continue selling. So I should have just waited for the market to pull back into the zone. Then I'll enter a buy at that time, set my stop loss maybe somewhere around here. Then allow it to happen. Then I would have made so much profit. I would have recovered the losses I made because my stop loss was didn't get here. My stop loss when I entered the sell, my stop loss was somewhere around here actually. So the trader would have taken here would have recovered the losses and made me new profits. But because when this happened, I was actually on the way to drop my child in the school. So I couldn't really look at the chart to, focus, to get that entry again. So why I'm telling you is this because you can analyze the market like what I did and I expected the sales, but the market didn't sell. I would have taken the buys if I was settled. I would have just taken the buys. It doesn't mean you are revenge trading. You're only doing revenge trading if you are no longer in control of yourself, like kind of you are trying to force the market to get back the money you've lost. That is what revenge
Yes.
trading is. Even when you are not sure of the setup, you see the market starts buying, you buy, the market starts selling, you sell. You're not even sure. Is it a pullback or any of those things? So that one is when you do revenge trading. But doing like what I've shown you is not a revenge trading. So if I had gotten the opportunity here, if I had tried to make a sell here, then the market kicked me out, then I would have waited to take the buy and it would have given me so much profit. You understand? Especially volatile pairs like this. Volatile pairs like this V25 one is. If you're able to find a good entry, a little move gives you so much profit. All you need is just ensure you have a reasonable account size because this kind of setups will give you so much profit in the market. I hope you understand. So it's very simple. Yeah. Do you have a question?
really.
Okay, so what you do is when you are doing the back testing again this time around, now be checking those areas where the market have retested. Excuse me. Try to check
Okay.
those areas the market retested. See what happened around those areas so that you master it. You
Yeah.
take note of it. Then we're talking about entries. In fact, I've mentioned entry as well. Once you see that the market bought in the zone, sometimes you just set, like I showed you, I set my sell limit and I set my buy limit most times when I see and believe based on my analysis and I'm confident the market is going to be buying from that zone. I can set my sell limit or my buy limit there. Then I put my stop loss down, just set my stop loss down in case the market goes against me. Let it just once it hits this SL, let it close the trade. You understand? Then my TP, I'll send my TP maybe somewhere around here. And you can see I will have a nice one is to maybe 1:3, 1:2, 1:4, 1:5, depending on the market. But if you are confident, then you're able to hold the trade. You know fully where the market will most likely get to this side. You can just hold your trade maybe from here. And then just do the back testing, you will see. You will see the opportunities that exist with this trading this particular strategy. All right.
Okay.
You see the
Okay.
opportunities. One thing is that once the market is able to break out of this trend line and do a retest, whatever you'll be seeing here coming down is a pullback. So you can use them to take your entries if you miss any entry. Like if you missed here, then there's another opportunity. Are you following me? Just like that, and it goes on and it goes on.
Yes.
All right. So that's how it is.
Okay.
All right. So
Uh,
if you have, since you do not have any question, we'll just go ahead and practice this thing. And I want to see how far you've done it. I want you to understand when it comes because by next week we'll be looking for setups to trade live. We'll be trading live
okay.
from next week. So I want you to just get acquainted. You'll be the one that will be showing me setups. Then we'll be trading.
Okay.
Understand? All right. So
Yes.
I've recorded this class. I will show you the link once it is ready. All right.
Yeah. Okay.
Have,
Yeah.
have a wonderful time over there.
Okay. Thank you so much.
You're welcome. Bye.
Bye.